Oh, did we post a link to anybody?
No, not yet, but we're live,
All right.
so we
Well, we are
can.
live.
We're
Okay.
doing it. You can tackle that. Money Mobsters 26, everyone. Thanks for joining. We have a full agenda, as always. We've got some news on the Frontier Labs, both from Gavin Baker as well as from OpenAI in terms of the revenue numbers. We have a puppy to my right who wants another toy to play with, and I will give him one because I'm a sucker and he's very cute. Dougie can testify.
Yes, can confirm.
What else did we have in here? What caught your eye this week, Doug?
Um, I mean, hey, what's the story of the day?
The
This
bonds?
might be the best crypto rally in.
Oh, Bitcoin, of course.
Well, I mean, Bitcoin, yeah, but Ethereum, 18%
Went
in a
quick
day.
in a day.
So, what's that going to do to BMNR prices? What's that going to do to Hood prices? Like, Hood going to open at 100 tomorrow morning,
It just might.
which will make me feel like a sucker for selling at 90.
Well, that's how the cookie crumbles sometimes.
That's how the cookie crumbles. Yeah, so I needed to actually raise some cash because
You made a purchase.
Yeah, I bought a
Yeah.
vehicle.
What'd you grab?
Is a Kia Telluride. Just a little used something for me to be able to move stuff around for the laundromat, and maybe if I have to take like really long drives, gas can be a better choice than electric. So,
For sure.
Yeah, anything over like 12 hours of driving probably needs to go gas. So,
Because then at that point you're stopping in your Tesla, what, like 4 times, maybe 5?
Yeah, once you get to about 5 times, it starts to, I don't know, just get repetitive. Or you started going to parts of the country that don't have a lot of supercharger network, let's say. So
would this be like the western half of Texas and maybe like
Northwest Texas.
Okay. Yeah, you
North
get out
Texas, West Texas, way out there.
What's that oil town that's way out there?
Oh, Midland.
Midland, yeah.
Yeah. No, Midland has lots of Tesla chargers. I was out there for the rocket competition, and like their Holiday Inns and Red Roof Inns and Hampton Inns all have Tesla chargers in the parking lot, way more than in the cities. I was really surprised by that.
So is it more like the Amarillo part of Texas, or? I mean, Texas is just so stinking big. I don't know.
Yeah, it's just huge.
Yeah,
and there are spots that don't have it yet. So, yeah, so you might be able to charge at your hotel at night, but getting there might be the stretch, you know.
Dude, this is hilarious. Is the mic picking up the squeaky toy?
Yes, the mic is getting the squeaky.
Hell yeah, absolutely. Dude.
I feel like we just need to go like a third cam on him full time. Just let him be the third member of Money Mob.
Here, we're gonna break the wall a little bit here. We're gonna take off the background, and we're just gonna shine the light on Duro going ham on this toy.
Yeah. Oh, what a good boy. What a big boy. Holy cow. He's huge.
He's like, what is this light?
He's huge.
Yeah, dude. He's getting pretty big. He's like 42 pounds now.
Oh my gosh.
Yeah. But yeah,
he was 9 when I was there.
Yeah, he was a jelly bean.
Yeah. And my dog is 25, you know, like, so for him to be getting close to 2x my dog, he's growing like a weed. Jeez. What are y'all feeding him?
Dude, just regular kibble. He's a lab. This is how it goes. Am I ever going to be able to fix this microphone or this camera? There we go. Oh my goodness. It was totally
worth it. We got Hollis in the chat. Can we make that the background?
It was worth it for the puppy cameo.
Yeah.
So yeah, we got a new ride. We got a mom SUV that's going to be a Swiss Army knife for you, and you got it at a good price.
Yeah.
You've got the Tesla for when you're trying to be cool.
Yeah. So the wife and I discussed it. So the Tesla is the daily driver. That's what we drive for the business. That's what we drive for pretty much everything. And the gas guzzler will only be for like just that flex thing where, oh well, you got an errand and the main car is gone, so it's going to live in the driveway mostly, but it'll still be used for.
Yeah, those cars, they're just so useful. Like they can just do so much.
Yeah.
The European mind cannot comprehend.
It's massive in there too, even with the captain's chairs in the mid row, because it's a little bit more of a luxury vehicle. I mean, I could have gone more utilitarian, but I just can't make myself just drop the bouginess, man.
Yeah. Did I tell you one of my favorite cars that I ever owned was a Honda Element? Do you know what those are?
Yes, I know what they are. I just don't see Austin rocking a Honda Element.
No, dude. This was like at the end of college and right after college. And I was doing a lot of big time road tripping at the time to like national parks and stuff. So for those who don't know, this is a Honda Element. So it's kind of like it's got that boxy toaster look to it, but it was built on the same base and had the same engine as a Civic. So you knew that it had like extremely good dependability and durability, but then you had like the cabin space here of almost like a Jeep. I mean, obviously the clearance isn't nearly as good and the tires aren't as knobby, although you could, hear someone who's gone with bigger wheels and lifted it a little bit. So you could always do that if that was your jam. But this was one of the best cars that was ever made, I think. And they don't make them anymore. They stopped making them. I guess the sales were too low. But these things were awesome. They had a nice 4-cylinder, tons of room. The seats would fold down perfectly flat. It had like rubber flooring, so it was super easy to clean out. Oh, check out this picture. Yeah, so this is a picture of what it looks like with all the seats folded down flat. So this is actually how I would sleep in the car. So I could just car camp right here.
You can definitely do that in the Telluride.
Yeah, and then if you want, and you can see the rubber matting here, and then if you want, you could actually take this seat here. If you follow the mouse, you could take the seat here, and it would hang up against the window. There was like a clip-in mechanism so that you could get both of these back seats out of the way, and then boom, you have this big giant area here in the back. So like just if you wanted to move, this thing was as useful as a pickup almost.
Nice.
Yeah, I love that car. And then some asshole came through and cut the catalytic converter, and that was that.
That's it. Yeah.
So.
Oh man, that's too bad.
That's too bad. But now I have a really fun sports car that I'm for sure going to get a speeding ticket in at some point.
Yep. Well, we'll see on the Kia, but I'm in that nervous phase right now where you wired your money, but you got a notification from your bank, but you didn't. But the other bank says they haven't received it yet, so you're just kind of waiting because you copied and pasted the numbers, so you didn't mistype them. But yeah, it's the waiting I hate. This is why I love crypto so much. It's like you can test transactions for cheap and then move the whole thing later.
Just working where I've worked, I worked at a bank and also a brokerage, and the amount of wire issues that we deal with, it's like, maybe people are on to something with the whole crypto thing, because it is so archaic what we have to deal with the traditional wire system. You just have two parties, and then like as a customer and as a user, you just have to like sit there and trust that eventually it's going to match up, and it takes days instead of minutes.
Yeah. And you're like, it's a wire. It's electronic. Like, how is there not a receipt here, bro? Like,
yeah, it's just weird and it takes too long. So yeah, the crypto rally. What are your thoughts and like takeaways from that? Do you think this is the end of the? I mean, I saw Amit the end of winter. I saw Amit had posted the rainbow graph, the power law graph, showing it just bouncing off of that. I know you like your Fibonacci levels. What are your thoughts?
Well, like so many other things in the world, it's wait and see. But it didn't do anything today that it hasn't done in the past. It's just one of those things. Like, and I didn't even get to watch Amit's close today, but I'm sure it was fun watching him.
Yeah, me neither.
Watch stuff go up.
What happened? I saw a bunch of people posting screenshots of Tanner wearing like a sleepy.
I have no idea. Captain Sleepy Time. I don't know. The one thing I'm upset about with this whole thing is we just blew right past 67,000, so we get no 6-7 memes.
I think that's already dead.
6-7 is not dead.
6-7's dead, dude.
No,
I live with a middle school teacher. Okay, she says that like when people say 6-7 now, there's literally zero reaction, and like if the adults say 6-7, like it gets a groan out of the kids. That's where we're at. And the fact.
Oh, good. Look, I'm not trying to bring it back to life, but I mean, at least the college kids are still finding it hilarious. But I mean, all trends start in middle school, so we'll see.
Okay, I'm looking through the clothes right now. I'm trying to find what the heck Tanner was wearing, because it was a little bit crazy.
Exactly. Martin says, yeah, that's how you combat that kind of stuff. Just start saying it as parents. Yeah, but dude, you want to know what happened to Celsius? 4-year-old white guy started drinking it. That's what happened to it. It was 20-year-old hot girls. Then
so you think Celsius kept going?
No, I mean, they had a nice little rally today as well. They've got that activist investor from Rockstar trying to take over the company, so we'll see.
Well, he was the previous CEO of Rockstar, right?
Yeah.
Okay, so I'm looking at it. It's at 32.26. It was up 8% today, up 17% the last 5 days. Still down 27% last 6 months, down 32% year to date. So it's kind of bottoming here. I'll show the.
But I'm acquaintances with a couple people that are like NIL reps at the college level for Celsius or Alani. So I hope they do well.
I know Ray really likes this name. He's bullish on like their international expansion. Personally,
I drink a lot of room to go.
I drink probably 3 of these a week, if not more.
Bro, we don't eat. Okay.
What?
My Amazon purchases came like, I don't know where I found. Let me see if I can find that. Your orders. Celsius. Am I not spelling it right all of a sudden?
But you think the brand itself is not like the hot brand anymore?
I mean, we'll see. But okay, so tomorrow I will complete my 100th order of a Celsius product on Amazon.
But those aren't like individual cans, right? Like, are you buying like 12 and 18 packs?
Yes.
Okay.
Or even the powders.
But I'm sure the powders aren't nearly as much, right? Like, that's not as good for them.
I mean, the little powder packs are $1 each. I imagine that's pretty good margin.
Good margin, yeah, but like not as much revenue. I think that's where.
Oh, for sure. For sure.
Yeah. Here was a ETH.
Yeah.
So
Boom.
this is a mini ETF, so this should pretty accurately track it, correct?
Sure.
Does that look about right?
Mm,
Let me just pull up
it's
that.
hard to tell because I know what the real price is. So
There we go.
the grayscale pricing is just.
Oh yeah, that was not correct. Okay, this looks a lot better. So you really had a rip starting this morning.
Yep. I mean, look, you could have made a lot of money in the last couple of days between Moderna and Ethereum. By the way, I have no confidence of the Moderna stock price staying up that high.
You gonna play the other side?
No, I'm not a shorter. I'm just like, that's 3-day rule. Like, it's gonna revert. Because look, they, even if they have solved cancer, they haven't turned it into dollars yet.
Right. Yeah.
So that's ultimately what they have to do is, probably price this thing. So if it's a single treatment, they've got to price it so high that they can recoup their investment on it at least, or make some margin on it.
This
But
is
they're
wild.
instantly going to get pressured by every government in the world to give it away for free. So
this chart
it's almost
is just
like,
so crazy.
don't solve a giant medical problem because you'll be instantly called the bad guy.
Yeah. How dare you solve problems and then make money?
Yeah, you solve the problem with the goal of making money, and then you actually do solve an basically impossible problem. And now when you want to make the money, we say you have to give it away for free.
Like this chart, my jaw is on the floor because they started at $19, moved up to all the way. This is peak COVID vaccine right here, $400 plus. And then it just slowly bleeds all the way back from $400. If you bought,
that wasn't slow. That was a 50% or 60% retracement.
It was a 90% retracement over 4 years. Look at this.
I mean, from 2020, if you run the chart up, I bet you that's pretty close to a 60% fib retracement.
Oh, fib retracement. I'm sorry. I was just saying percentage down. Yeah.
Yeah. And then overall it lost 90%.
$26. That's like a minus 95% loss there. And then just all of a sudden you just think it basically tripled today.
Yeah. Well, it turns out they didn't make a lot of money on the COVID vaccine. They needed that COVID disease to last a lot longer and be a lot more deadly, and need their vaccine to be a lot more effective.
Yeah, I'd say both of those things would probably have to be true. So you like crypto here, and
I called it 3-4 episodes ago. I said we may be at the bottom. I'm not telling you financial advice, but when everybody's shitting on it, that's the time to buy.
Exactly. Yeah, we talked about how the sentiment was bottoming, and we felt like everything that could go wrong had already gone wrong.
Yeah.
So you want to walk us through Hood here? I'm going to let this puppy out before he starts making tons of noise here. I'm going to probably talk about.
All right, full disclosure, I'm out of Hood, or am exiting Hood. I can't pull up the charts because he's off running around. But yeah, so I'm closing my Hood position. I needed the cash. I feel like they have a lot of political risk right now that I want to just take off the table. They're now, the majority of their revenue is coming from prediction markets, and my sense is that when Team Blue is in charge, they're going to cut that off at the knees. For better or worse. I mean, I'm more of a libertarian. You do whatever you want with your money. But my whole thesis on Hood is they're a great company. I'll probably have an opportunity to buy back in lower. in the future. But they're probably going to go on a run here, and I just have other places I need my money at the time.
Here's the charts. So year to date, it's basically flat. Well, actually down a little bit, but over the last year, it's going to have a tough lap, but it also does seem to have a lot of tailwind as well, right? Like if crypto comes back in strong, equity markets are going to have more fresh meat with some IPOs, and SpaceX is going to be really volatile. That's always going to get traded. You've got the Trump accounts, and those seem to be built out and done now. I think the Trump accounts actually took up a lot of their development time. So yeah, if the markets remain strong, like I would not bet against Vlad. Like he crushes.
No, I don't want to. I want to be back in, and I want to go to their conference in Houston in September. If somebody can get me an invite to that, because I would like to get back in again.
There you go. I think we might know a few people who have some contacts at Robinhood IR.
Yeah.
Let's get our boy Dougie there. He's a true fan, true analyst on the company as well.
I mean, I rode that thing with Amit the whole way up. Like I was one of the people he was talking to before he made that call.
Yeah, Hood like retired you, right?
If I had done a better job of holding the calls, yeah, it would have.
But you still made
it could have. I made it great. I'm retired because of Hood, but if I had played the trade fully out correctly, I could have absolutely fully retired off of it. Just that trade alone. But yeah, it's made it possible for me to retire for sure.
Isn't it nuts that at one point they traded at cash?
Yeah.
That's
the grab thesis to me, and pretty much I was like, well, I mean, you buy the stock, you're getting a lot of cash. Oh, and it's also growing, but I can't, like, I've just run out of time on that dead money too. So those are the two things I sold off to buy my car, is my grab and my Robinhood.
What are your thoughts on this? Like Hyperliquid as a catalyst to Robinhood? As I understand it, Hyperliquid would actually be a low take rate business relative to options. That's just my understanding of it, though. Do you know much about Hyperliquid?
No. I hear a lot of people talking about it. I am ill-suited to comment publicly on it.
Okay. Tell us in the chat. Tell us. Still new.
Give us some info on Hyperliquid.
Yeah.
I know Hollis knows it. I know Raven knows it.
The other big
I do want to shout out though, while I'm looking at the chat, a special get well to Junie, who does not appear to be here tonight. She is dealing with some medical stuff that was scaring her a little bit. She put a post in the group chat about it. So anyway, thoughts are with June tonight as she's dealing with that. But
yeah, we love June. Hope she makes a speedy recovery, and the scares go away.
Yep.
She watches our show, I think, just about every single time we're on. So
yep.
Good friend of the show.
And a moderator.
The other big story that was going on besides crypto today was like bonds just heating up, and both in Japan and the long dated treasury having issues keeping prices down. You hear the president is getting frustrated about it.
Yeah.
And you saw the Treasury Department start to take action. And the way that I read it from the Kabashi letter, the X-Page Kabashi letter, is that they basically refinanced $3 trillion of debt from like a fixed percentage to an adjustable rate. So it refinances it to keep the rate down short term.
Yeah.
Kind of like a repo operation. But it actually makes it a higher rate over time, especially if the adjustable rate part continues higher.
Well, this is where we need to have a little discussion about one of my favorite guys in the administration, by the way, but Scott Pacent. You're on TV talking about all kinds of stuff. Your main job as Sectres is you're the nation's bond salesman. If the bonds aren't selling, then it's your fault.
These are like terrifying numbers. Do you mind if like we look at a few of these?
No, we can. Absolutely.
Dude, this debt per taxpayer number scares the shit out of me. $361,000.
Yep. Well, I mean, as Amit says, it's a fake number, doesn't mean anything. They'll just print more. You'll never have to pay it. I mean, so ignore it.
But when they
I don't agree with that take, by the way.
Yeah, I was gonna say when they print more money,
it just gets worse.
Yeah, it gets worse. You squeeze the middle class, and purchasing power erodes. And who does it?
You better have equities already in your portfolio because that's where it'll all accrue to.
Right. Anything with cash flows or growth. Those two items, cash flows or growth. Like it has to be inflation resistant. So you could also think about like real property as well.
Yeah. I had a conversation today with Chris Patel, a little one-on-one chat about an investment that I have that pays a dividend, and it's actively managed, and they use a lot of leverage on bonds. He's not the biggest fan. He has been in the past, but he's not right, at least not right now. But the more he talked, I think the more he kind of talked himself into taking a look at it again at these levels. Just because the price to NAV has like come back down, and like every time they touch, there's a big spike on price. So I bought a little bit more today with some extra dust I had in the account, just to try to crank my dividends up. Because I do think, look, we've had an amazing bull run, and we may continue to have one for the next few years. But if you're not turning some of that into dependable stuff you can sleep on at night, continue to generate actual cash for you, you're just asking to keep all this risk in your account, and it can get blown up very quickly. You could have a Liberation Day type event. You could have a Moderna chart happen to your account with stuff that you thought was golden. I mean, hey, the company that's cranking out, the best vaccine in the era of COVID, like they're going to make a whole bunch of money. Oh, they retraced 90%.
Here's another concerning chart. I hate to be like a Ray Dalio doomer, but like this is just what we're spending on interest payments.
Yeah, we've got to get that whole Trump thesis of 3% growth, 3% yield on the 10-year, and under 3% inflation. Like none of that has really happened. Maybe the growth certainly has.
Yeah, and the unemployment is fine.
Yeah,
it's just the spending, dude. It's like, and Elon tried to fix it, and they
excommunicated him.
They let all the terrorists at his business, and you had governors clapping their hands when the stock price went down. Like, dude, how weird is that? I don't know, man. We got to do something about it, though. Otherwise, Friedberg and Dalio are going to be right.
Yep. Venom, I am unsure how I feel about that because I personally have a lot of NEOS. So I haven't fully thought through what's going to happen there. Are they going to roll those into the other GS income funds, or are they going to maintain them? Like, what's the plan, the future there?
Here are the bond rates. No, we will not accept your advertisement. So you can see on the long end of the curve, the 20-year and the 30-year, they're starting to creep up above 5. And I think it's specifically that 30-year that's, you have a wide spread there between the 10-year and 30-year. So I think that's where you're getting.
We have got to get some bonds sold, and that's Basent's job, and he's not doing a good job at that. He's doing a great job at other stuff, but not at his principal responsibility.
So here's what it looks like over 5 years. So it's just really steadily crept higher. Even going into the election, it was creeping up. Just because you had, the end of COVID and then the helicopter money, and then they had to raise rates.
Yeah.
Really, ever since they had to raise rates in 22 to fight inflation, it's just kind of crept higher as our debt problem has just kind of gotten worse. And
well, the big beautiful bill. I mean,
and the spending.
Elon wasn't wrong. Elon and Thomas Massey weren't wrong, but they ran both of them out. So.
Thomas Massey's very much in the fight still. Isn't he a senator?
He lost his primary.
Oh, he did?
So, yes, he is a senator, but he's on his way out.
Got it. What else did we have? We had, so, how do you play this macro environment? Like, with the backdrop that we're looking at, we know they're going to print more money.
Both sides will print money.
Yeah. Blue and red team both are printing money. We've also been talking for a few months now about how Trump is just a Bill Clinton Democrat, right? Yep. So he's going to print money.
Everyone is going to halt their data center build outs.
Okay.
Everyone is doing it. I guess that's what the cool kids are doing now. If you're a governor, you just stop the data centers.
But it also seems like the market is now starting to reject giving, they're making you earn capital, which is kind of where you want to be at. So if you're a government and you're trying to issue debt, you have to prove it now. If you're Google or you're Oracle or you're OpenAI and you're trying to get capital for AI, you have to prove it. So the checks and balances are working. I think it's really healthy because you have markets responding to credible threats of, bad outcomes. And that places a break on some of the stuff of Dario fucking saying, we're going to be the only company left in the world. It's going to be us and governments. Dude, what a fucking stupid thing. If he actually said that, that's so dumb.
He did.
Yeah. So, either growth, cash flowing assets, real property. What do you think about gold here, or even
gold's basically been a meme coin since last year. Gold and silver.
Pulling up the GLD. I was actually looking at call options on this 2 weeks ago for what if this exact situation, right? You have an escalation in Iran or, the bond market or the debt becomes a problem, right? And you can see the market is also this is a consensus trade, but it does also feel like the move is warranted. All things considered, it's basically more than doubled, right? We see stocks that will have a much weaker thesis than this that will go up 5x. What are your thoughts on that? Do you think that this is a bull trap, or do you think this is a good way to hedge the U.S. dollar hegemonic system, the U.S. petrodollar reserve currency?
Okay, you're trying to hedge against the loss of the petrodollar?
Yeah, basically, if the United States commits suicide, right? And we're so stupid that we can't figure out how to unfuck ourselves.
Buy VIX calls or short the Qs, bro. I mean, that's if that happens, the whole system is coming apart. So there's not a little hedge.
Well, no, it could be
something
a transfer
that you can have.
Couldn't it be?
Maybe buy Europe?
Some other currency, right? Maybe maybe gold becomes the new transfer mechanism, or even just like you get really high volume of people trading digital gold, like through GLD, right?
No, if the petrodollar goes away, markets are like, we're going to see a reaction in the markets like you can't believe. It's like, okay, so your gold hedge might pay out 20-30%, but the rest of your port is taking a 60-70% haircut.
No, that's the thing. I think there's so much liquidity in dollars and in treasuries that if there was a rotation out, I don't think this trade is over. That's what I think. This could honestly like double or triple if that were the case. It just feels like a stupid waste of money.
No, we have the world's reserve currency. If we lose the status of that, that means the other nations in the world will dispose of the dollars. So basically, they're holding dollars, literally in real dollars, in vaults and shit that they do USD transactions with, that they have backing all of their electronic chain or exchanges.
Right.
When you travel to Europe and you want to trade your dollars for lira or euros or whatever, right?
Yeah. So what I'm proposing is
they will release all those dollars that they are holding onto the open market, and that will create hyperinflation in the US dollar and kill everything. So maybe maybe what you're saying is there's enough liquidity to absorb that shock in equities, and they will continue to reprice.
It may not be a shock. What I'm proposing is it could be like a slow transition of usage. So like now the US dollar is obviously the dominant currency, but what if gradually over time there's a phase out?
Bitcoin. Just let it eat the liquidity wherever it exists.
But so like if you're a government and you want to trade with another government, or your banks, or like your really large Fortune 500s of your local country,
right?
Are you going to be moving that money in Bitcoin where like everyone can see the chain? Wouldn't you want to sort of obfuscate that a little bit? Because that's
no. They're not going to use they're going to obfuscate, but Bitcoin will eventually absorb all the liquidity they're dumping on the market.
I mean, I'm sure they'll catch some of it, but like, where's most of it going to go? I feel like more would go to gold or other currencies.
Well, who would take their place as the reserve currency?
Maybe not take their place, but
yuan?
Like to use it like a competitive analogy, like take market share. And yeah, so you could have yuan, you could have some sort of BRICS currency.
No, Raven, stable coins can't reprice as all that would happen is the size of the pool of stable coins would increase, making them less valuable.
Yeah, I've heard Besant even explain that stable coins would actually be bullish for USD, because it would kind of like lock in the dollar moat, because we would have then a technological advantage on top of, right? Did I explain that correctly, Doug?
I'm unfamiliar with, like, I understand the use of stable coins. I really understand the use of the stable coin business. I think they're really good businesses. But I just don't like their utility as much as something like a Bitcoin. Because you could then, as a government, you could just sit in Bitcoin and transact with whatever currency you want, foreign currency you want to. But typically what we've seen is anytime people have excess dollars, they put a portion of it in Bitcoin.
No, I might have to get me some, honestly, as like a bet against my own stupidity of being wrong on this. Because it does seem like, and this is not financial advice, but it does seem like this is the time to make a decision. That's how I'll word it. You know what I mean? like if you're gonna jump in and you don't have any, does this not seem like a good time to do so? Can you pull up your fib levels?
Funny, you should ask.
You can do a little session of Austin Learns TA.
I mean, I just did the highs to the lows, man. The golden pocket lined up perfectly.
Explain what that is.
Which is the 618 golden ratio.
Oh, that's the buy zone, right?
Yeah, that's called the golden pocket because it's a play on the golden ratio, 0.6.
Right. Oh yeah, and we even did an episode where you said to buy on that date, right?
Yeah.
Because it bounced off it perfectly.
Yep. And yeah, so I mean, they're about to run up back to the 50, but I mean, this was the one you were interested in, the 200 day. So they just breached the 200 day, came back and closed above it. So we'll see. They've touched it before on this downtrend, but they've never had a close above it. So what we would like to see is something like arrows. Give me arrows. Arrows.
They're in there somewhere. I know it. There they are. We got some arrows.
Yeah. Well, actually, this is more what I want. Yeah. So what you want to see is something like this. It'll come up, it'll come down, it'll test the SMA again and bounce, test it again, and then off to the races. Up to the next level. Right?
Now, what happens
if this SMA is probably actually still going to trend down a little bit. But you would like to see it like test this SMA a couple of times. But if you wait too long, it's going to get away from you again, and you're going to be saying, "Oh, I can't buy. I just had a big run." You know, like the RSI is the daily RSI yesterday was at, what's this number? 454, and in one day it went to 73. G's and P's.
I'm with Venom. Can we do gold next after we chop this up here?
Sure. You can pull up any chart you want.
Dude, Jackson is so funny. Did you see what he says?
I don't have chat up right now because I have to open a different window.
He says TA is garbage. Also, Austin, can you pull up your fib levels?
All right. Which one do you like as?
No, not yet. I'm not done with Bitcoin because I have a question. Okay. So what if this is like a bear trap and we just kind of fade off and we bounce off that golden pocket, the 0.618? What happens if we test it a second time and we succeed?
Well, you already kind of double bottomed here.
But so what happens if it comes back down to 58? Would that at that point be an exit? Or would you wait?
Sure. Yeah. Set a stop. Yeah. Set a stop loss there if you're worried about it. But, you know, if you breach that number again, I'd say start buying. Because it won't stay below that. You would at least get a good short-term trade off of it. It'll come back above the 618.
So far of everything you showed me, like I like the fib level the best. So that's for you, Jackson. The fib level seems to make sense to me because you describe it as like a law of nature.
Yeah, which means it's a law of which means in large numbers, the psychology of the psychology of the crowd moves in a predictable way that's well, it's at least observable as
and
a natural
repeatable.
phenomenon.
Yeah, exactly. It almost feels inevitable.
So you don't know what way it's going to happen on any given day, but you can say, oh, these are numbers that will be important because they always turn up in nature as it rolls. So
Right.
this fib level, and it's also Fibonacci is a naturally occurring sequence as well. 1, 1, 2, 3, 5, 8, 11, 19, whatever it is, right? So
can we do gold next?
we can do gold.
Yeah, and you could just do a GLD.
This doesn't look like it has a lot of liquidity. Spider Gold shares, is that right?
Yeah, exactly.
All right. I mean, there's a lot of gaps here. Most gaps get filled.
Now, just keep in mind if it's marking day charts that gold trades 24 hours, whereas
Right.
this is going to trade on what is it, an 8-hour basis from the market open to close.
Well, but TradingView should still give you the overnight sessions. Yeah, just on opens and closes here.
So this is what Venom said. Gold is breaking out of its downward channel.
I mean, it's testing its 200-day SMA right now.
So really key level here.
Yep, and gold RSI is sitting at 66. So, I mean, you might like gold better than you like Bitcoin, and that's fine. Gold has certainly had its run.
I'm just trying to figure out how to size it because I realized today after Palantir made the move that it did, I was buying. I was at 7-8% is what I was down to at one point, and then it got down to like 125, and I just kept buying. I just couldn't help myself. I even bought some call options before the earnings that I've now sold. I realized that I have more Palantir now than Google. I didn't even realize it. I refreshed my chart today, and I was like, "Holy crap! Palantir's done so well that I actually have more of that than Google." So
awesome.
I'm just kind of looking at like, do I just hold my core position? So I've got my Uber, my Amazon, Palantir, and Google, and how do I want to build around that and just kind of make it a little bit more indestructible, if you will. So I might be looking at picking some of these up and sort of rounding things out because I don't have to be married to equities, even though I feel like I understand those the best.
Well, I mean, the whole idea with something like a hedge, if you're using gold as a hedge, right? The whole idea there is just buy that and forget it's there.
Right.
Just start stacking it, right? Or like be a real baller and buy yourself some real gold, right?
Well, I don't want to hold it. I'm not trying to make myself a freaking target.
I mean, safe deposit boxes in the bank are fine.
Did I tell you I got Selena to watch Heat?
No, you didn't, but that doesn't seem like a big ask.
No, she fell asleep 4 times before. Like this was like our 5th attempt trying to watch Heat, and she'd never made it past an hour. And then this weekend in 2 separate parts, we got her through the first 2 hours, and then she fell asleep, and now she just falls asleep in every movie.
She watches movies like Amit. Is it a cultural thing?
I don't think so. No, she just, by the time we get a movie on, it's like 8 o'clock, which is like her bedtime. So it never works out. Like we'll always start one, and then like 15 minutes in, I lose her.
Well, I mean, I guess there's nothing you can really do about that. Let's look at the. Let's see what happens if we do this.
Oop, sorry.
Boom.
Can you zoom in on that when you've got it ready?
I'll just point these out. These little, like, so this is only revealed, like, I don't have it like perfectly dialed in, but this is only revealed after the whole thing plays out. But like, look at these, like, look how many times it hit this 726 and then bumps here and then bumps here, right?
Right.
It's just like these are the numbers that turn out they're gonna exist. But if you want to see like a buying zone for gold, then it looks like it may have come up under here. Let's see if we might have caught the psychology a little wrong. Might have been this last lowest RSI point would be called the bottom of this particular run. Sometimes that's the issue, right? Is why people call it astrology, is because you don't know exactly where the last true bottoming was on something that just kind of doesn't ever really present an obvious bottom. But we'll just pick this last lowest RSI here.
Well, and that's largely because any chance that it's gotten cheap, it gets bought up because the government just keeps fucking spending money.
Yep. So here you go. You've run you triple topped this almost, and then ran past. So okay, well, like what's his name said, there's no such thing as a triple top. So top was a double, and then it came up again. And there's no such thing as a triple top, so you knew it was going up again. So then it flirted with the 50. Ran all the way up, and then kind of flirted with this 382 line before it recovered. So this might be doing this type of thing, though. Right? Like, you could be...
What about long-term, though?
I mean, that's a lot harder to predict because there's so much macro involved in the price of gold.
Got it.
You could be doing that.
So it could be, but it also could break out as well. So it seems like this could be a good opportunity to buy half, save half, if I want to own it long term.
So what you might want to say here is if we go well, if we obviously break through with some volume here above the whatever price level this is, 414, then it's probably off to the races again. If you buy here, maybe you set a stop loss at like 384, because if we retrace half of this run, you're probably going all the rest of the way back down.
Okay, and then at that point you just live to accumulate another day.
Yeah, or join the community. Yeah, you could exit here and then say, all right, this is going to a lower spot. It would not surprise me actually to see the SMA and the trading price meet here at the 50.
Right. But
then you
like 385 though, I've already sold half of what I was gonna buy. And then as it starts ripping down through 360, 340, 340.
Yeah, then you're part of the community.
Yeah.
But then you would say, okay, well, like I can
trickle in.
Yeah. So you just start looking at price points, not financial advice. But these are significant numbers on the way up, and you can see how fuzzy this was on the way up as well, right? Like, and look at the gap. Look at the gaps that got left on the way up.
Oh yeah, big gap there. Whoop.
Okay, so to come back,
that was Iran war, right? That big gap up. That was March.
This is August. Yeah, this is I'm on the weekly here.
What was that?
This is 2025.
That was
August through October of 25.
That was Trump trying to pick Fed chair. Is that what that was?
Yeah.
And then what was the second rally?
Well, to the end of the year. So when everything else topped, let's see, gold started trading as a meme coin as well. So yeah, late January 2026, that was the top of pretty much everybody's port, gold included.
But like, what was the key underlying? You had Trump.
It was just the top.
Fed chair. You just have the top is the top, a macro top. I'm just trying to see how much downside there actually is. I like your idea though, just setting a stop loss at what was it, 387, 383.
Yeah, but I mean, you're going. So what we might. So okay, so let me find the right arrow here.
Because you also want to be invested too if it rips, and that's why I say like do half, not like pussyfoot around and do like 10%. You want to have a dog.
So here's what you want to see happen, right? Is you want to come down, you test it one more time, come down, and then
bang,
and then rip through, right? What you don't want to have happen is this, and be holding the whole and have bought here,
right? Because you're talking being down 28% at that point.
Yeah,
that hurts.
So I mean, you're sitting right on this fib level. So I mean, put a buy in if you're already just breaking higher again. Okay, well you missed this bottom and you're going up. Okay, I would not make it a sizable bet, but you can get something on to say, okay, well it's going up, and if it comes down. So this is, if you buy here, this is what you're looking for, right? Because you're gonna retest this level again. It's gonna get retested.
Okay. And if it does get retested at point number 2 there, where you've got it marked, is that a second buy that you can do? You can add on at point number 2.
You could, especially if you get some confirmation. Like if you wait like a couple days and you know that was a bottom.
It's already bounced.
Now you know it's double bottomed and you can rip, and it can rip.
All right, dude, I like this. This is good.
But yeah, if you're looking for a solid entry point, though, you very much could see something like this,
right?
And this curve continuing, it'll stop ramping up as much because you've come down, so it'll kind of flatten off. Yeah, flatten off, and they'll meet somewhere around here,
and then that's your next
violently,
and that's your next shot, right?
Yeah, and you could bounce violently off the 200 SMA, and then if you go under, well, now we're in a bear market for a long time.
Yeah, if gold is getting hit, problems, right?
Well, if gold is getting hit, equities are doing great.
Oh, that's also true. In which case, I don't care, right? Like if I get hurt on gold and equities are ripping.
If you get hurt on gold, your Palantir is smoking.
My Amazon, my Google, probably even my Uber. By the way,
your Uber probably would outperform because it has the highest ceiling to go.
Did you see, by the way, that Uber had itself a day? Uber was up at one point like almost 6% today.
I mean, I told you I was curious about it. I just, rather than buy cars, I had to buy a car.
That test.
So what was the day of your post, bro?
Which post?
You're like, I've had it with these bears, Uber bears.
I want to hear from the Uber bears.
Yeah, was that Monday?
Yeah, that's up in the go higher up. It was to the right, all the way to the right. You see those red candlesticks on the very end of the chart?
Yeah.
It was one of those. It was pretty recently. Yeah, one of those.
That's what I'm saying. So, okay. So you've had a like 5% move since then, and
I
you've
started
crossed the 200 SMA.
I started looking at it at the beginning of July is when I really started looking.
All right. Well, you crossed the 200 SMA today, so I
Mm-hmm.
mean,
Yeah, I'm up to 15% weighting now. Actually, it's probably a little bit bigger after today, probably like 15 and a half. Guys, nothing we say is financial advice. I'm just telling you what I am buying. I like it, dude. I like it. They rolled out AVs today. They have a partnership with Zipline to do delivery. Delivery is their fastest growing segment. And as you can see from the chart here, they've been getting beat up. And this is what Mark Mahaney likes to call a high quality dislocated stock, right? It's dislocating from its fundamentals. EPS and cash flows are going up, but it's got a narrative problem. And at some point, that narrative will resolve. At least that's the thesis, right? It is a contrarian bet at the end of the day. But if the narrative resolves, you're getting a good price here.
well, here's why I had to exit Grab, because I didn't believe Uber was safe either. I'm not saying Uber won't go up. I'm saying that I will not be able to pull the ripcord out quickly enough if the AV revolution happens in the blink of an eye and Uber gets stuck.
How? In the blink of an
eye. Know thyself. I am not someone who sells very quickly, and I might enjoy 100% gain on this, only to write it back down all the way to exit with maybe a 20% gain after losing most of the value and the time I had in.
But how does it happen in the blink of an eye? Let's walk through it.
I mean, either Waymo starts truly scaling as like an S curve, and they finish their divorce from Uber, or
can they do that?
Or Tesla Cybercab.
Hold on.
Let's officially happens, or
here,
both together are gang up, gang up on Uber.
They're not going to gang up. Stop it.
No, not gang up, but like they just create so much headwind that Uber cannot, and Nvidia and Mercedes and Zoox and all these other AV taxis just take them out.
Okay. This is good. I like
because they're not vertically integrated. They're just the marketplace. Okay. Uber's bear case in my mind is that they become eBay. They're a marketplace. People can get in and out, and they can get rides that they want.
Is Expedia.
And they can sell rides, but they're going to be the provider of last resort.
No, not last resort. Not last resort. So let's walk through how this is going to happen in the blink of an eye, because I think that's where the rubber meets the road. Is
blink of an eye? I mean, it could be a month.
No, it's not.
A lot can change in a month in this market.
No, it's not going to be a month.
These product cycles.
Look, Zoox and Waymo have production caps, right? Like they can only produce so many cars so fast, right? Uber is still growing 20%. They added more rides from Q1 to Q2 than Waymo has ever given. That's how big the size difference is. Uber gives 14 billion rides a year. Waymo gives 50 million rides a year.
Yeah, but as a consumer, you are not locked in. They haven't sold a subscription plan on Uber yet that people are like, oh no, I pay for Uber every month. I better better use my Uber. Okay, they're still selling rides one at a time.
They haven't,
and they have the least attractive business model when it comes to pricing power of the other big players.
You know they have an Uber One membership?
I do know they have it. I don't know anyone who freaking uses it. I'm sure I don't know anyone who freaking uses it. I'm sure people do. I'm sure wealthy yuppies in New York use it. But you need more than just the urban elites buying your subscription service to make it attractive to Silicon Valley and Wall Street. You've got to sell iPhones to moms and pops at Verizon stores in Acacia, Ohio.
They have 200 million monthly active users.
Yeah, so like that can all use something else the instant that the price is 1 cent less.
But if that was the case, they could use DoorDash, and right now it's a duopoly, right?
Yep.
Especially after
DoorDash is stuck because they don't have rides as cash, so they've got to have all their margin on
delivery.
On delivery,
right? But Uber has mobility, and right now, what customers want, and I think what they'll continue to want, is three things: price, speed, right? Like how fast can they get there? How fast can the car get there? And how fast can it get you there? And then safety. The safety thing is still being worked on, especially in AVs, and Uber's partnering with a lot of AVs. They even
AV is something different, but I don't consider my Uber driver any safer than
of course not
than any other driver I've ever ridden with.
Sure. So the safety thing, but as far as price and quickness and convenience, right? That's what you're ultimately paying for, and that's also what you're paying for with Uber Eats. So the business model is if you have too many AVs, right? Say you're Waymo and you're trying to stand up enough AVs so that you can handle the Saturday night rush or the Friday night rush in your local market. You're going to have too many AVs. You're going to spend too much money, because that means that at least 30% of those cars, because there's variable demand, at least 30% of those cars on the weekday are just sitting in a lot doing nothing. Where if you have too few cars, then you just have to jack up price. And that's where Waymo's at right now, specifically in like SF.
Well, you can jack up price because people prefer the luxury and the safety of not not riding in a stranger's car.
Right. But the more supply constrained that the AV fleets are that go first party like Waymo, the more market share Uber retains. Correct?
No, this is like the power generation puzzle for a power company. Okay. You have a base load that you can run up to 110, 115%, right?
The AVs, and the base load.
Yeah. And then so AVs are going to be the base load, right? They're going to compete back and forth for the component of that base load.
And Uber will be a part of that mix, by the way, with partners.
Yeah, for sure. They'll have a very small portion of it, because nat gas plants do run all the time and coal plants do run all the time. Okay. But you have other solutions, better solutions, more efficient solutions for the base load. Your peak pricing, they're going to have some stuff sitting on the sidelines for peak pricing as well. And only the ultimate peak pricing will you be willing to, when you have to get a ride and you can't get one, will you be willing to pay the premium to have a human come pick you up?
But that's just not what we're seeing, because there's not enough AVs.
Because there's not enough AVs for that yet.
Yeah,
but those are scaling.
Those
are going to scale on an S curve.
Two things. No, it's not an S curve though. Here's why.
They will be.
It won't, and here's why. Number one, production. Waymo and Zoox literally cannot produce enough vehicles to satisfy the demand you're talking about. Number two, which is way more important for Tesla specifically, because I know that you're going to say the manufacturing capability of Tesla is, yes, they have it. Great. They figured out manufacturing. They have all the cars. Number two is regulatory. You have to actually be able to get all these approvals. And one of the things, if not for the efficacy of the self-driving and the vehicles and the vision-only approach that Elon has decided to go down, the second thing is Elon has already pissed off all these government employees. What we talked about in the first half of the show, like, I really like and admire and respect that Elon went to bat for the American taxpayer. But one of the prices that he has to pay is now he has to go and ask all those government workers for approvals on his self-driving technology. And there's governments, DC, Chicago, New York, that aren't even approving Waymo. And Waymo's doing everything right. They're open book. They're saying here's the data, and they're taking safety super seriously. Meanwhile, Tesla's like fiddling their thumbs, trying to figure out how to scale.
They've got a launch event on the 23rd, so we'll see what they actually do.
They have a launch event every 6 months, and nothing ever happens.
I don't disagree with you, but at some point, it's going to be the real launch event.
I hope so. I hope they figure it out, but like that also doesn't mean that they're going to be able to.
What I'm saying is that is a future that is certain, and I think Uber will do well. The price will do well in between then and now. I don't know when then is, but I know I'm not a good enough investor to pull the ripcord and exit at the proper time.
Now,
because I've already cooked in all of that risk to the current price.
Okay, so a few things there. So the stock price is already priced in for failure. So that's my first point. Second point is that Uber is not getting priced for any delivery growth, which is happening and has lots of growth to go, because convenience is going to continue to be important to people. And you're going to continue to see growth on Eats, especially with Delivery Hero. You're going to see some synergies there. And then the third thing is you also have to consider, like, everyone's assuming that Robotaxi is like one day is going to transition from beta product to perfect. And it's going to be a 0 to 1 jump. And then it's going to be approved instantly in all 50 states. 0 to 1 is not happening. It hasn't been happening. It's going to be a gradual process, just like Waymo and Zoox have been. They've slowly gotten better, gained more trust, earned consumer confidence, earned regulator confidence. The Department of Transportation is not a federal agency. It's 50 different states. And then also they have to get city permits.
It literally is a single federal.
No, you're thinking of the National Highway Safety Transportation Administration. That's different than actually getting an approval from the Department of Transportation from each individual state to be able to operate a robotaxi. That's why it's 50 and not 1.
Okay, but there's also the supremacy clause of the Constitution, which would trump any of those.
No, it wasn't, and it hasn't, and that's why Waymo gets individual approvals from each DOT. Even Tesla has had to go through this process, right? Like they had to do it with Nevada and Clark County, I believe. So I think all those things, they just add break, where Uber is already being priced for having like this explosive moment where we have a 0 to 1 jump to AVs, and then it proliferates within 3 years. And I just see it playing out much, much slower. And I see Uber also being able to compete in that space and being able to have partners. I see FSD fracturing. You have Alpha Mayo, you have AV Ride, WeRide. You just have a lot of players who want to be in that space. So I see it fragmenting, sort of like LLMs did. They became sort of
commoditized.
They commoditize, and then you have the platform that aggregates all the demand, because fleets, if you're an AV operator and like you're putting in $200,000 to this AV, you want to make sure that it's getting high utilization, so that it's getting not only lots of fee from doing lots of rides, but it's also getting lots of drive time exposure data. So if you're WeRide or AV Ride or Neuro or even Lucid, like you want to be able to get your car on a platform that's going to be able to aggregate that demand. And at the end of the day, that's what the consumer wants too. I know this is anecdotal, but I'm sure this has happened many, many times. I tried to get a ride home from downtown Phoenix to my place, and the Waymo was wanting $90. Okay, it was going to take an extra half an hour to get to me, and then when it did, it wasn't going to take the highway because they're not on highway yet. They had gone on highway. Now apparently they were off highway. I've been told that they're supposed to be back on the highway, but apparently not this route, or maybe not this time of night. So the route was going to actually take an extra 15 minutes as well. So for $90 in a Waymo, 1 hour later I can be home, versus an Uber, $25 and half an hour later. So saving me.
Yeah. So you've got pricing power there, but when there are enough Waymos and they can go where they need to go,
but there won't be. That's what I'm telling you.
It goes the other way.
That's what I'm telling you. If they have so many Waymos that exist, then it's going to be capital inefficient because you're actually going to have too many cars. The utilization rate will be too low, and it'll be a bad use of capital. That's the unit economic argument. Does that make sense?
I think I see what you're saying, but
so like on one end, you have high utilization and capital efficiency, right? So like say you were going into Georgia, like Atlanta, and you only do 1,000 Waymos. You're for sure gonna have good efficiency 7 days a week, right? That's going to be efficient capital allocation. On the other end of the barbell, you could have 30,000 Waymos, and it's gonna be able to service all of your customer base on Friday and Saturday night, but like on Sunday and on Monday nights, Tuesday nights, Wednesday nights, you're just gonna have a bunch of cars sitting in a lot depreciating, and they're not gonna have good utilization because you have too many cars. This is the problem that car rental companies like Hertz get into, right? Like how many cars do you buy? And also if you buy enough cars to be able to service all of your customers, now you own a depreciating asset.
Yeah.
So there's an equation there, and that's where Uber can solve that problem, because you have a flexible demand problem from your customers, right? You have peaks and valleys from your customers. So that's where flexible supply comes in. People coming onto the platform, providing their own vehicle to be able to do the job. That's where that part has to be right. Otherwise, the rest of my thesis gets blown up.
Yeah, and for that reason, I'm out. I mean,
for that reason, I'm out.
I mean, your thesis to me is only one of multiple things that can take place, and either way, on a long enough timeline, it's going to get subsumed anyway. So,
but what if A, Uber grows on delivery, and B, Uber partners with all these AV people and they're able to defend their market share?
Okay, well, that's some ifs and maybes, and we haven't seen that play out. We haven't seen that those companies are willing to give away premium that they've developed to Uber to help them get rides. So what will happen though is you'll have the big couples. You have Waymo and Tesla and maybe one other brand name. You'll have Coke, Pepsi, and Dr. Pepper of the brand names, right? Or maybe Uber is the Dr. Pepper. Okay, so you'll have Coke and Pepsi.
No.
The AVs.
Uber is Coke.
You'll have Coke and Pepsi on the AVs, but then you'll have Uber, which is the marketplace for all the small players to put their AVs on, because they're going to want distribution that Uber has. So I'm not saying there's no future for Uber. I'm not saying they're going out of business. Okay, I'm not that Tesla crazy person who says they're going out of business. What I'm saying is their stock is priced for perfection because of the risk to the rides.
But I
Uber's
think
going to have to find other things to do. And delivery could be a great business, because getting the food to the curb is only part of the problem, especially in cities. You've got in apartment complexes, you got to get the food all the way to the door. And I'm sorry, we're not gonna use Tesla robot or Optimuses to do that, riding up in a cyber cab for a long, long, long time. Like there's going to be other more valuable jobs that Optimus robots can do besides walk your pizza from the car to the apartment door.
And I think the same can be said for AVs delivering that pizza too. I think mobility is going to be.
Yeah, but the taxi ride thing that I think people pay the most premium for, that's going all the way to autonomous vehicles as soon as they can.
I just think it's going to take a lot longer than people anticipate. That's all.
It depends. It depends how long it takes them to manufacture.
Right.
I mean, what if Zoox cuts a deal with Tesla tomorrow? It's like, hey, you got all this gigafactory stuff. We need to get some stuff built. Lend us a gigafactory.
That would require Elon to admit that he was wrong on LiDAR.
He very well could. Look, he was right on LiDAR at the time. You could do it without LiDAR.
Sort of. Mostly.
And LiDAR was hella expensive at the time when no one else was trying to build a car for the consumer. Everyone else was building a science project.
Look, I'm not going to criticize him for making the wrong call.
Along the way, the price of that LiDAR came down dramatically.
Which was foreseeable. But again, I'm not gonna throw rocks.
But he wasn't making a car for 2026 back then. He was trying to keep the company in business.
I know that's why I'm not, again, for the third time, I'm not gonna throw rocks because I'm not engineering full self-driving cars. So dude, hats off for you for figuring out how to make 95% of a full self-driving car. But if he does have to admit that, what do you think happens to Tesla stock price? It would be an emperor has no clothes moment, wouldn't it?
No, I think it's the other way around, bro. The instant Elon's like, yeah, we're going to do it, the stock will probably go down 15% that day, and then it gets bought back up 30% the next day.
But then you're just a subcontractor to Zoox. You're not, he doesn't own the whole vertical value chain. He would just be a subcontractor.
Are you saying he can't make them?
No, he can make them. What I'm saying is, you get way more value if you make a robo-taxi, you install the robo-taxi, you charge the robo-taxi, and you run the network and you take fees the whole time, especially if you get the third-party thing where you I sell Dougie a cyber cab, and then Dougie at home, he's
what if he capitulates on
the robo-taxi's out there
says, okay, we're going to have to go install a LiDAR on every vehicle that's going to have full autonomous self-driving.
If Tesla becomes the subcontractor and just builds a bunch of Zooxes, Zoox gets to be the one controlling the network.
Oh, okay, we're back to this.
Giving the rights.
Okay. Yeah. Sorry, I thought you were asking what if Elon admits that they need LiDAR. I'm like, okay, well, maybe he does. Maybe he should have done it 2 years ago, and he'd be 2 years into building cybercabs with LiDARs on them and not have to keep trying to fight this battle.
I mean, can he do that, or should he? Is that where we're at right now, or no?
We don't know what the holdup is. That's one thing we don't know. We're not getting that information from Tesla. What is the holdup? We know it's not fabrication issues because you've got the gigafactories ready to go.
Yep.
The software we see is really, really good. It is not perfect. It is really, really good.
So what if one day after SpaceX acquires them, he's just yeah, I've been wrong about LiDAR, but I already have a fix for it. And they just retrofit all the cars with LiDAR real quick. And that's how they run it.
That's basically what they're doing with hardware 3. I mean, it's going to be a one-time cost, right? A one-time cost for each vehicle that they've sold that has FSD in it, right? And they're only going to have to do that against vehicles that have FSD subscriptions in the wild. Otherwise, it's just what you're building in the factory. And those haven't started scaling yet. So if he does have to capitulate on LiDAR, well then, I mean, ultimately, who cares if he gets the product out the door and is selling it?
Right. Like it'll be forgiven.
Yeah. Because that's what he's really got to do. No one said, oh, the stock is only valuable if Elon can make FSD happen without LiDAR. No, he took a stance on that. And I guarantee you, he's not going to let go of it easily, because Optimus robots have to figure out where they are in the world too. And he's trying to do that with vision. And he doesn't want to carry a giant LiDAR on top of those things and the battery that would take to operate. Right? So, I mean, cameras is the future for Tesla. Got news for you. It's also the future for SpaceX. He's probably going to have a full self-driving rocket before he has a full self-driving car. And by rocket, I mean one that like docks with another based on vision only, but probably also later.
I want to get back to the Uber chart here. So it's definitely been like in a consolidation. Specifically like the last 6 months or so, and it kind of appears that it's bottomed out a few times, but also held pretty strong. Now it seems to be breaking out. So you've got Bill Ackman, David Tepper, Ro Khanna, Pelosi, Jeremy Grantham, Austin finds Alpha buying the stock. No, just kidding. Like
have you ever heard of a Wyckoff accumulation?
Talk to me.
This is another stock chart thing. I've never been able to use them because this is complicated AF to me. Someone else in the chat might know it better. Wong, technical trader Wong might be able to help you out with this a little bit better. But this is a Wyckoff accumulation phase.
So are we in phase B with Uber?
We might be headed to phase C, but could be in D. We could be recovering in this D spot.
Got it.
Right? I mean, I don't know. Can I share more? Can I share more than one tab and you put them side by side?
No. Oh, well, you can do window. So if you put them all in the same screen, you can share. You can just share the whole screen.
Okay. Stop sharing. Share screen. Share window. Okay, let's see if I put more than one tab on.
Yeah, you just share the whole window and then split the screen in half with the two different things.
Okay, and then how the F do I do that again? I know there's a way to just do it. Okay, split view. There we go.
Booyah.
Boom. Okay. So we're going to close the watch list there. Give us some room. Okay. So here's on the way down, phase A, AR, ST, resistance line. Like, this is where I can't tell. But then you have this spring test.
Right.
And then it pops up.
So it kind of looks like we're right where that LPS is.
Yeah. LPS might have been right here. And you might be at SOS right here. And then it kind of consolidates and then breaks out. So, I mean, but yeah, this is a bottom formation.
I should have cut my calls, huh?
I mean, you might do well there.
I went weenie baby. I'm all shares.
You went shook baby.
I went shook baby. That's right. Shout out Matt Money.
We need shook baby merch, dude. Shook Baby Capital LLC.
Shook Baby Capital. Then is that? Hold on, I'm gonna get on X right now, and I'm gonna.
You're gonna see if that domain is available.
It's too good not to get it.
I mean, you have to give it to Matt. Like, if you get it,
yeah, I'll give it to him.
Actually,
I'll give it to him. Yeah, we'll figure it out. I'll sell it to him for $1 million.
Or a ride in a Porsche.
I would also take a ride in the Porsche. I tried to get him out here to Arizona because, dude, we just have such awesome roads out here when it comes to like twisty driving.
Yeah. Hey, he said he's down for the football game too.
Oh, he's coming?
Yep. I mean, we'll see if it actually happens, but
do we still have
we had dinner. Art came down from Dallas and brought his girlfriend. And we met up with his buddy Josh, and Ray and Michelle came out, and we all went ramen and bar hopping.
Hell yeah. I was seeing some of it. I didn't know that Art was in Dallas, so that makes sense. So we're gonna have Matt at the football game. That's awesome.
Yep. And then I got another couple that y'all don't know them, but they also confirmed that they're coming.
It's gonna be, how many people are we gonna have?
I have 8 tickets.
Hell yeah, dude! Look who we have. Look who it is, everyone. June. She's kicking ass. So we're gonna see. Let's see here.
See, No Rules is 80 minutes behind Stupid Veronica Mars and Gilmore Girls. So I don't know what you're watching, but
yeah, that's wild.
The wife and I actually almost forgot. Forgot tonight was Wednesday night, and we were perusing our at least 3 of our streaming services for what we're watching next. We finished a rewatch of ER, which I had never watched. Yes, Drunk Arthur is funny.
I'm still trying to grab Shook Baby Capital. I'm not very good at it. I never use X on desktop, so like I'm actually incompetent. I feel like such a boomer.
I mean, shouldn't you be using like GoDaddy or something?
No, I always use my phone. Like my phone's always in my pocket. Like why would I need a different thing? You know what I mean?
Yeah.
Add another account. Okay, let's do it. Continue with username.
You're getting Shook Baby. No, I was saying get the domain name, bro.
No, I was getting the X name.
Get the X name. Okay. Oh, I wouldn't be surprised if that's taken.
We couldn't find an active account with that username. I'm going to text
Matt. Snap.
Texting it right now. Shook. I'm very excited for this game because apparently Texas is supposed to be very good. And also LSU, the preseason ranks came out, right? LSU is like, what, 11th?
Yeah. New coach, so we'll see. Apparently no one is allowed to use number 5 in the entire state of Louisiana for anything ever again.
Why?
Because Jaden Daniels said his people told him that LSU is not allowed to use his name, image, or likeness anymore because they said someone else could use the number 5. So Jaden Daniels won a Heisman Trophy, and like basically the whole state is like, nah, bro, you're dead to us.
We got Ohio State at 1, Oregon 2, Georgia 3, Notre Dame number 4, Texas Longhorns at 5, Hoosiers number 6. I think that's actually pretty interesting that Indiana's at 6 without Mendoza.
Yeah. Like how much of a team did they build?
I guess we're going to find out. And that's the fun of college football. They also could have had a ton of transfers in. So that's the other thing about these polls that we really don't know is like what's the impact of all of the transfer portal stuff. Miami 7, A&M 8, Miss number 9. The Sooners are 10, and we got the LSU Tigers at 11. Texas Tech Raiders at 12, Bama 13. The Joseph Smiths at number 14.
Yep. Well, one thing is for sure, when we get to November 14th, that will no longer be that order will no longer be the case.
I mean, it should still be top 25 for each team, I would imagine.
I mean, there's only, it's what, week 7 or week 8? There's only like 3 games after.
By the way, is Jackson coming?
Jackson is not on the list. But there's nothing that says Jackson can't come hang out with us.
Okay.
Like, I mean, if more people want to come, like, I can try to get more tickets. I just I bought 8 tickets at the auction when the second it went online. I had to use my uncle because he has more like priority ranking points than I do.
Okay. Dude, I've had it with the Texas. Like, we're the only guys who understand football supremacy. Okay. People in Ohio, we understand football too. Okay. Let me tell you.
No, Louisiana is by far the highest number of NFL players by per capita than anywhere in the world.
Florida too, man. Florida punches above their weight.
Per capita.
Why are we doing per capita?
Because take the relative size of the population. Like, okay, yeah, California has the most players, but they're the largest population state. So they're going to have, like, on an even distribution, they're going to have the most numbers of players. Texas it being number 2.
Yeah, but no one says, like, Idaho is more productive economy per capita than California. They say California is the 5th biggest economy.
Yeah, well, I'm just saying by population, if the rest of the world has like 0.1% of the population becomes an NFL player, okay? In Louisiana, it's like it feels like 3% of the population become NFL players.
That's funny. Have you ever seen the stats on like guys over 7 feet tall that like their odds of joining the NBA go from like 1 in a million down to like 1 in 100 if you're over 7 feet tall? It's nuts.
Yeah, I believe it.
Shook Baby merch should be onesies. I wish I could figure out what's going on with them. It's like the stream that I looked for earlier at the beginning where Tanner was wearing like a onesie. Let me see if I can find the picture because Hollis sent a really funny picture earlier. I'll just pull that up instead.
Yeah, so Louisiana is second in the United States, producing 1 NFL player for every 72,000 people in the state.
Holy smokes. Is that number 1?
No, that's actually number 2 behind Georgia.
Georgia, okay. Yeah, they hit heavy as well.
Yeah, but finishing well ahead of like Texas, Florida, and Colorado and California.
So I'm pretty sure that the Tanner one is real and the other 3 are AI, right? Is that?
Oh, for sure. It's got to be. Yeah.
Okay. I was like, what are we looking at here? But yeah, that's what Tanner.
I'm unsure. It was on the mod chat. Someone posted. I think it was probably Michelle probably posted it. I was unsure what I was looking at, and I was doing other stuff. I didn't get to catch the close today.
Me neither. Yeah, actual work calls. Sometimes you have to put the side job on hold, get the real job done. Oh, he said all one prompt. Hollis, was this what was this? You, bro? Was this chat or was it Gemini? What did he use? Let us know. How much is a box at LSU?
Oh, God. Bro.
Stop it. Stop it.
I mean, do you own Cane's or not?
They're from Louisiana, Cane's Chicken?
Yeah. He's Raising Cane's. He's like the biggest donor. He's an alumni.
Oh, that's cool. Raising
Yeah,
Cane.
it was like one of his like business school projects, capstone thing where you have to put everything in, and they his professor failed him.
Really? Like,
Yeah.
so Cane's was his capstone, and then
the business plan was his capstone.
So he was like actually building a business plan, and the professor's like, "You suck, you idiot!" And he's like,
no one will go to a place that just serves chicken. You have to have more things on the menu. And he's like, "No, I don't."
I will say I'm not like a deep fried chicken person, so I don't go to Cane's. But I understand that people who love Cane's fucking love Cane's, and I just see them popping up everywhere. Yeah. In Ohio and Arizona, everywhere.
Their quality has really come down as they've increased distribution. They used to be by far the most like succulent, tender chicken tenders. Now they're just kind of back to being mid.
Dude, what else did we want to talk about in here? We had we had Reddit. Reddit got included in the S&P 500 and then immediately sold off. Wasn't that so funny?
Yeah. Well, look, Robinhood had fully round tripped from when they went in the S&P.
Like so fast though, like they got like a 12% pump and then immediately faded it within 3 days.
Yeah, I don't know much about that. But like I don't like the company, so I don't want to own their stock.
Yeah.
Okay, so Hollis, there is literally no amount of money you can have to get those box tickets. You have to have like
connections. You got to know
connections. Yeah. You have to have priority points to even like apply for them. And that requires years and years and years of acquiring points.
What did you think about the OpenAI numbers? Him saying, not him, but the company saying that they had 18% quarter over quarter revenue growth, but that their operating margin actually got worse. Did you see this?
I heard that, and that's why he had a big sell-off last night. And then everybody's like, I don't care.
And then you have Dario's totally out of control, and like Karp is kind of like publicly checking them right now, which I think is so fucking funny.
Yeah, he's
like these guys are out of their mind. Like you actually have to work with the companies and not just like take their data. And they're burning tons of money. So like a lot of people are looking forward to the S1, trying to figure out like, is this going to be a sustainable business model? How long are they going to be able to burn cash for? Really is one of the main questions. And then the second question is, okay, if they're still burning cash for a year or 2 years, like, are they still able to pay all their bills to Microsoft Azure, Google Cloud, AWS, and even the Neo clouds that some of that excess demand is falling into, CoreWeave, Nebius? It's getting really, really interesting. I cannot wait to see what these S1s look like and all the hoopla that's going to surround them.
Oh, man. If the S1s have any spelling errors in them, the market is tank 10%. I mean, it's, so we're going to enter a world, though, where the market is not held up by NVIDIA anymore. Essentially, now the market is totally dependent upon OpenAI and Anthropic's earnings. NVIDIA is like, has been, right? Didn't it seem like that?
Yes and no. So like we know that a lot of the cloud backlog and the RPO that's there is from the two the two frontier model companies. And that's what's driving a lot of like the gross margin gains, right? So when you get into a supply constrained scenario and environment that can drive gross margin and operating margin for that specific product way higher. And that's where you're seeing like AWS, Azure, and GCP all accelerating at the same time because A, they're adding tokens, but B, they're also getting more price per token. And part of that demand, and it seems like maybe half of the demand, is coming from those two companies. So you would really like them to pay their bills. And I'm exposed to this trade with Google and Amazon pretty heavily.
Yeah.
Now, without those two companies, you would obviously still have growth and demand, but then does the growth look more like 30% organic if you remove those two companies rather than 80% for Google Cloud? Or like for Azure, does the demand look more like 20% rather than 43% if you remove OAI? So like you're really hoping that these companies can pay their bill. And I just think, we've talked a lot about how you kind of just want to align yourself politically with the powers that be. And it seems like there's too much riding on these two IPOs that they're going to be able to figure out how to explain this to the market, and they're going to make it happen to where that doesn't become a risk, and they're going to be able to smooth out the messaging, just like they did with SpaceX, right? Like SpaceX is a ridiculous price, and they were able, like the market's been able to digest it so far.
So nice segue to the other thing I had, which has just been just like I wanted to like interrupt our other streaming friends all week and say, you guys, like this is crazy. SpaceX is being valued like it is an AI hyperscaler company. Okay. Because they're doing a little bit of that business.
That's like a lot of their CapEx spending is data center, right?
Right. Yep. And a lot of their revenue. But they're being in the zeitgeist, they're still a launch company. And so all of space and launch is being tossed in the same bucket as SpaceX, but SpaceX is really being valued as an AI company. So you have this like crazy like delta between like SpaceX and Rocket Lab, where kind of they're like when days like launch gets sold off, they both get sold off. But then when AI runs, SpaceX runs, and Rocket Lab still gets sold off or something. But then other days, SpaceX gets bid up and Rocket Lab follows because it's being bid up on launch. Like it's the craziest thing to me to see these two things trading either in lockstep or exactly opposite.
Right. It seems like very bipolar because some days it trades as with the AI trade and with SMH, and then other days it gets traded as launch goes, and Rocket Lab seems to get the short end of the stick both ways. Is that kind of the idea?
I think so. I mean, I don't think Rocket Lab is going to have much of a good day that SpaceX doesn't have.
But that's silly because they're two separate companies. And one of them is 100% a launch company.
Yeah,
and the other...
We've seen how the algos do not care about that anymore. That's why, like...
That's an opportunity.
All of SaaS got sold off. It doesn't matter what your product was, who your customers were, how good your contracts were.
It absolutely matters. Like, and we know that that's an opportunity for us, right?
Right. What I'm saying is, it hasn't mattered to these algorithms who just sold off SaaS because we don't like SaaS anymore. Well, who's in SaaS?
Palantir.
Yeah, like you have some amazing companies that are growing like crazy. And are not getting vibe coded away, who are going down for no reason. Like, okay, maybe some of their larger cousins should be going down and are at risk of being vibe coded away, but not these. But they're getting sold off as well because they got thrown in the ETF in the sector.
Did you want to share this? What you have pulled up?
I still have this Google search pulled up. No, I didn't mean to have it still pulled up.
Okay. So Anthropic.
I can stop sharing.
Oh, Brad Gerstner said that margins are going to be lumpy. So that seems like putting lipstick on a pig, to be honest. Like, I think lumpy is kind of the tip of the iceberg, if I'm honest.
Yeah, I don't care.
Anthropic. So Gavin Baker went on All In and said that
was a killer episode, by the way.
Should we just? I don't have that clip, but he basically said that he has it on good sources that the company thinks that they're going to be the end state is only one company in government.
Anthropic and governments are the only institutions that will remain. And J. Cal starts clowning him like, I think someone's going to want to deliver my pizza. And I'm like, my guy can't stop thinking about his Uber shares. and meanwhile, so I'm like, no, I think someone's still going to want to like go to the laundromat, bro. Like, are you going to, how are people going to wash their clothes, my guy? Like
Anthropic's going to take over oil and gas. Like, what the fuck is he trying to say right now?
They're going to like, all business, and let's remember this, everybody, all business, all money is based off of food. Like the original food, going back to the oldest governments we know, was food. Like literally, like the Nile River, 5,000 years before Christ, even like the demarcations are there on the Nile River to see how much it rose during that flood cycle. So the Egyptian government knew how much to tax the farmers. And they paid in grain. They didn't turn it into money yet. They didn't have money yet. They paid in grain. So all money is based off your ability to get food. And we forget about that sometimes.
We do. It's taken for granted. I would say that oil is probably more important than food nowadays.
I mean, a lot of what we have oil for is to make stuff to help us grow more food and package more food and deliver more food.
Yeah, like food is so abundant now that like we're spending more time on productivity items.
Yeah, because of refrigeration and plastics. For all of you people who want to just stop oil, well, that means just stop eating.
That's funny.
Tex, I'm gonna start painting grain soon.
He's got grain. He's got a bunch of grain. He's like that.
If these open AI numbers don't get better, so how good should they be?
I mean, that's very much like beauty is in the eye of the beholder, right?
Yeah, like we don't know what a LLM company is supposed to be valued at. I mean, you could you strip Gemini out of Google and try to put a value on that?
I would like to see them become free cash flow positive, or at least be trending in that direction within 18 months. Otherwise, you're now going to worry, and you need to be able to show that trend is happening.
I don't think they can. I think they're iterating too quickly on the software, and the software has too many new hardware requirements.
So then you run into headline risk there, right? So at that point, is SMH your hedge, or is something like Oracle or NVIDIA?
I mean, don't twist my arm to buy more NVIDIA, bro. That was the other great point that they made on All In. Is NVIDIA is basically the bank of AI now.
Yes. I didn't watch the All In episode, but I agree with that.
And I was like, okay, great. Give me another reason to buy this company.
So you're happy with them being the funder and supplier of the ecosystem.
Yeah, because who's going to get all the value out?
I mean,
banks make money.
Some bets might work, some bets might not. You're just hoping that they become the next Google Ventures, right?
Yeah. So
Yeah.
I'm fairly certain the winners will pay for all the losers.
I see that.
And Jensen's a lot smarter than me.
Jensen is very fucking smart. He knows how to make kumbaya. He's very good at bringing a lot of adversarial people together, right?
Yeah. He probably could get OpenAI uh and XAI to play well with one another.
I don't know about that one. There's Nvidia.
Like this is just begging for a breakout to me, but that's not looking like a double bottom or anything. I mean, it's just trading so freaking sideways.
Yeah, I think people are just waiting for confirmation that like all the investments that they're making and that like first of all their investments aren't going to go belly up, but then secondly that their demand is not going to just evaporate overnight if these two companies have issues. So I'm going to be watching this one very closely because if the Frontier Labs have issues with their S1 and it doesn't go well,
it's going to go right to Nvidia's stock price.
Yeah, exactly. And I think that, again, that's an opportunity for long-term accumulators.
Yeah, for sure. I mean, right after people like Nebius get just absolutely slaughtered.
Oh my gosh. Dude, RIP to the people holding NeoClouds if these S1s are not good. And I'm not sure that they're pricing in that risk. I don't feel like they are. Like, what's Nebius at? Like 270?
It had a bad day today.
Oh, 223. Yeah, I had a pretty rough day. Oh, was that okay? So you blink and you miss it. 2 days ago, was it $277? And 2 days later, it's at 223. CoreWeave is at $90. 2 days ago was at 110. Can I talk about accounting for like a second without putting everyone to sleep?
I mean, you can try.
EBITDA, earnings before income, taxes, depreciation, and amortization. I can't say that word. I can never say that word. But if you have a mortgage, you know what the fuck I'm talking about. Okay. So EBITDA. Can we stop using EBITDA as a measure to say, okay, the EBITDA is going up? That's increased profitability for a NeoCloud. Can we stop doing that? Because depreciation is the biggest fucking part of the EBITDA equation here. If you look at, and I'm pulling up CoreWeave here, not to say that it's not a good investment. I just don't want people thinking that because EBITDA is going up, that means that the company's making money. This is what happens when you include depreciation and amortization. Okay? The depreciation part of the equation is huge. I'll turn on trailing 12 months. Boom. $4 billion in trailing 12 months. How much was the revenue? $7.6 billion. So 60 cents of every dollar is going towards depreciation. So that's why if you look at the EBITDA, it looks like they're raking in money, right?
Yeah.
Oh my gosh, the EBITDA is crushing. Oh my gosh, look at this. The EBITDA growth year over year is 105%. Guys, EBIT.
Leave the DA out. Okay.
I want people to be aware of that when they're investing in this company, because what you need is for the unit economics to work long term. Otherwise, it's just going to be a sentiment trade, right? And if it's a sentiment trade, fine. Like, this is the bottleneck, and you think that energy is there, and you think that the price for an A100 and an H100 and then a B200, Like those prices are all going to go up, and that CoreWeave and Nebius and Iran and CRDO and all these companies control the supply, and that the energy hookups are actually what's valuable. Maybe you even believe that there's going to be regulatory people stopping all the data centers, right? Like Dougie points out, Team Blue just stops all the data centers, and now you have a constrained supply.
Team Red's doing it too.
And well, Abbott, right? In Texas. So you have the populists coming in, the Luddite populists coming in, and it's kind of a form of regulatory capture, and I can buy that thesis. But what I'm saying is, that's my one reservation. Please stop using fucking EBITDA for neoclouds. That's all. I'll get off my soapbox now.
Yeah, look, it's a fine measure of the performance of a company when the depreciation is at a reasonable level, right? Like you got a little bit of capital spend every year, you're depreciating some of it, fine, whatever. But when it's like the majority of your EBITDA, that is a great rant. I feel like there should be a Bill Ackman-esque ex post for the morning open tomorrow, discussing or highlighting that particular item and sent over to some of our friends to highlight.
Yeah, I've been dropping it on everybody, like in YouTube comments, on the live streams. I have been I'm not going to name them. They're good friends of ours, okay? But like the people who have been abusing the term EBITDA in the instance that I'm talking about, I've done my best to make them aware. So like, here's the overlay. Jackson had asked for this. So you've got the revenue in blue, the EBITDA in orange, and then you've got the depreciation in purple. So you can see that the depreciation in most cases is actually larger than the EBITDA, which is why when I add in EBIT here, it's going the wrong way, right? That's that green marker there. You can barely see it.
Yeah. Or you could also do the EBIT to EBITDA ratio.
Yeah, exactly.
That's a thing in your stock analysis.
Is it in here?
I don't know, but it would be a useful ratio.
Nope, we don't have it.
Because it would be getting tiny, because you'd have the EBIT going negative and the denominator getting huge.
Yeah, so that's all. So like, it's fine if you think the unit economics are going to work out long term. I'm not trying to like trash the stock. I think that's just in the too hard pile for me, in the same way that Dougie doesn't want to invest in Uber. Like, it just seems a little bit too crazy and hectic, and there's a lot happening in that space, and it's a battleground, and that's fine. That's where I'm at with the neoclouds. I wish those people well.
I mean, we're going to need them, right? I mean, they're probably good businesses. Right. We're going to need them.
Yes. Like, do they capture value? Different question.
Right. Yeah. Or is how much value is left in the stock price for me to buy in? Like, that's always the issue, right? Like, if it was $5 a share, you wouldn't care, right?
Right.
Like, I mean, yeah, like if the valuation was 1/20th of what it is now, you'd be like, oh yeah, okay, I'd be interested in this. But it's the current valuation that you can't buy with.
So Hall says all that depreciation equals what they will spend to get new chips. So that's kind of the concern with the Moore's Law thing, right? Like, if the chips just keep getting better and better and better, the faster the new chips get better, also theoretically, the faster the old chips should depreciate, right?
Yeah, but the old chips are not an expense like we're used to them being. They are money makers now.
Even the A100.
This is Jensen. The main thing he's trying to get the market to understand. These things make money. They may not make as much money as the newest, hottest, latest thing. So you might not have the same margins on them, but like a car that's paid off that you're being an Uber driver for versus one you're still paying out on a loan, like
Right.
this is fully paid off, it's fully depreciated, whatever, but it's still generating.
It's alchemy.
Yeah, it's still generating all the money for you.
But
somebody was. I made a point today earlier to Steve, and I forget the total context of the discussion, but we were talking about how the SaaS companies and this little trade we're stuck in right now, where SaaS and hardware are inverse to one another.
Right.
It's almost like daily, right? Oh, SaaS is up, semis are down. Semis are up.
And it doesn't need to be that way.
It should not be that way. What does SaaS need? What's the number one thing SaaS needs?
I mean, to make software, you need to have hardware.
yeah, to run software, you need hardware. So if you're going to expand your software business, what's something you're going to need more of?
More hardware.
Yeah. So if the hardware companies are healthy and they're making more chips and they're making more money and they're able to do more R&D and make better chips, what is that going to do to SaaS?
So I think where that narrative breaks is like you have
who has pricing power. It's Fugazi.
So this is the oversimplistic high level view, right? Like you have software 1.0, traditional SaaS, and then you have this new AI thing where you have software 2.0, where now you're able to replicate that easier. The problem is it's not that simple, right?
I guess. I mean,
what
if the market has it backwards? What if the companies that make the hardware say, you know what? The vibe coding tools are all freeware. We're just going to vibe code the LLMs out of existence. We're going to vibe code the frontier models out of existence using freeware or using open source.
I mean, that's basically what's happening, right? With the distillation of the frontier models. And that's where this comment actually comes into handy. Depends on how much compute we need. They may get handed down to less intense tasks. So that's where you have less intense tasks being handed over to open source models. And by the way, those open source models, they use just as many tokens. So the cloud service providers actually don't care if it's handled on DeepSeek or if it's handled on Opus, right? To them, like this token usage is the same. They're a toll booth at that point.
Right.
So that's where I don't feel like I'm that much exposed to GCP and AWS. Only time will tell if that exposure actually does come and punch me across the face. But at current, the Chinese open models use just as many tokens as the frontier models. And so any demand loss from pricing that OAI or Anthropic has saying you guys are too fucking expensive, that demand will just shift an RPO from OAI and Anthropic to other model providers that are offering a cheaper rate, but the meter keeps clicking for price per token. Does that make sense?
Yeah.
Am I missing anything there?
I mean, we'll see if that's how it plays out. I just don't think that being on the bleeding edge, like Ferrari is not the world's most valuable auto manufacturer.
But they do make a lot of money.
They do. But they don't make a lot. But they don't make a lot of cars. Not a lot of people use them.
Yeah, but the right people use them. Look at this.
Well, that's not just auto sales though, right? That's also racing ventures and lots of other stuff they have.
Sure. But at the end of the day, like they're making handmade cars that are really, really healthy margin. If we look at like their profit margin, this company makes buckets.
Yeah.
Here
Of course they do. They're using Palantir.
22% profit margin and then a 26% free cash flow margin. I was looking at this the other day. Friend of mine, we were talking about, companies.
Which car we're going to drive, and you're like, I'm going to drive the most profitable one?
No. They make you do a bunch of hand waving and moral posturing and social posturing before you get invited, right? Have you heard of this?
No.
Yeah, Ferrari, like you can't just walk into a Ferrari dealership. You have to be invited. It's very posh, and I don't fly with that shit. I drive a Toyota GR86. It's a really good time. It's a tenth of the price of a Ferrari, and if I crash it, I won't go bankrupt. How about that? So
I drive a Tesla Model Y. I'm faster than the Ferrari.
and my GR86. Yeah, both of them. But yeah, this company. So we were talking earlier, friend of mine, about how if you end up in this situation, we were talking earlier about bond yields and being with the political insiders, and if the Titanic is sinking and everyone's like getting the silverware off of the boat before it sinks, like one of the last things that you'd need is this like luxury products, right? So hotels, experiences, luxury retail, luxury cars. So we looked at race, and one of the things that actually happened to the stock price when they released that EV car. You remember that they released that EV car and everyone hated it because, in all fairness, it was awful and an insult to the brand. I think, was that this day? No, it was down in here, wasn't it? Back in March.
I don't remember.
Look at the recovery though.
Yeah.
From 320 up to 420. It's not bad. Not bad at all.
So all that to say, the most expensive, most exclusive product is not always the one that dominates the market.
No,
not to say you can't have a good company, but
volume.
As nice as Ferrari is, they're not going to be a $10 trillion company anytime soon.
Correct. Yeah, they're 81 billion market cap right now. We ready to wrap?
And I bet you that OpenAI is going to try to debut at 4 trillion, meaning if you want to double your money, you needed to get to 8. And we lost Austin. So I think he's got a doggy emergency because he just ran. So anyway, boys and girls, it is 11:15. All you money mobsters out there, thank you so much for joining us tonight. I'm going to go ahead and tackle the sign off. You obviously don't have to do it, but we would appreciate if you did like and subscribe if you haven't already. I know most of you have. But yeah, anyone new to the show, to the channel, we do appreciate you guys coming in and chatting with us. And there he's back. Okay, he's back for the sign off.
What can I say? When you gotta go, you gotta go.
Okay. Yeah, you were kind of jostling around there. I wasn't sure if that was.
Dude, I was struggling through it. It was tough.
All right.
I thought we were gonna have enough time to wrap. I thought I was gonna make it, but did not judge it well. And I was like, dude, I gotta pull a ripcord here.
I was like, you could have just put in the private chat that I gotta run and sign off. So anyway, signing off from Money Mob episode 26. I did such a bad job of counting these, but yeah. But anyway, we do appreciate you guys coming out to hang out every Wednesday night. And
yeah, thanks everyone for joining.
We'll see you again next week.
Hopefully we found something valuable for you. Ciao.
Bye, everybody.